All right, welcome to the client support webinar for November 24th, one day before Thanksgiving. So happy Thanksgiving, everybody. Have a safe and great time with your families. All right, let me just quickly run through the administrational items, and then of course we'll get to any questions that you have. Now, on the webinar console, you'll see an area that says questions. So you need to open that up for you to be able to type in questions to me, okay? So just kind of note that. All right, first thing I have to cover are the risks involved in trading. I think we all know about those risks. Just check with your financial advisor, money manager, accountant, whoever handles your situation there. They know your personal situation, we don't, so they'll be able to tell you if things we talk about here are suitable for you or not. And of course, always trade with risk capital. Really important, and know how to do risk control. Good stuff. All right, those of you, we got a pretty good turnout today, considering it's the day before Thanksgiving. So many of you, I think, I'm looking at the list, it looks like many of you are current clients already. Some of you may be kind of new clients. So if you haven't gotten any of the books, this is a great place to learn what I'm all about. And I cover money management, Elliott Wave, and a whole bunch of different stuff in these books. So that kind of may interest you, as well as our trading system, which we call the ultimate trading system, because it deals with not only scanning for setups, but if you get all the different parts of the software, you have charting software, scanning software, they're all sold a la carte, or you can buy a bundle, whatever works for you. And then we have risk reward calculators and traders assistants too. I'm going to show you a little bit about the traders assistant today. All right, so those are all available on our website if you want to learn more about them. Also too, I just want to say what a great time we had at the summit last week. Really nice group there. We did a lot of day trading on Friday, had a really lot of fun there, and we also went over potential position trades on Saturday. We went over all the questions that everybody had there, and it was great to interact one-on-one with people. You know, I haven't done that since the last summit, simply because everything tends to be online now, you know, everything webinars like this and so forth. But I got to tell you, when you get together as a group in person, it's really super. I used to do that all the time, you know, going back in the early 2000s. Basically, was the way to do it. I used to do trading challenges at all the traders expos and all that kind of stuff. Really good time, great way to interact with people and get to know folks. All right, so here is the ETH USD, which is a form of the crypto, you know, Ethereum, and the long-term charts, you know, have it going up into, it looks like a wave 3. We could be getting ready for a little bit of a correction on this one, so be careful if you're using that. On the top, you have the scanners here. I also have NinjaTrader as well. I have the MES right now on a 1-minute time frame ticking away. This is what we use for day trading and so forth. So if you have any questions, feel free to ask. I wanted to bring up the Trader's Assistant. Now, the Trader's Assistant is something I'm going to talk about a little bit about today. And the Trader's Assistant is how we keep track of our trading records and results. And I'm going to show you our futures day trading room account here and have you take a look here. I'm going to go back to when we opened it up back in March. So let me go back here about 3/4 of this year. So the first quarter there. Okay, so right about there, I'm going to hit select, and that's all the trades we've taken in the day trading room. So what's interesting about this, if I look at the equity curve, what's interesting is you know, we followed rule base here, got way up real high, and then we experimented with moving our stops to break even right away. And we all thought it would do better, except for me, because I've done that before, and it didn't. And the reason it didn't is because what happened was that you really, you're losing trades. The only way you move your stop to break even is if you have a profitable trade and enough of a profitable trade to do it. So what happened is all the losses were at 2% or 1%, I guess we used 1%. And then all the winners, okay, didn't win as much because the volatility stopped us out because we had the trade move to a break even place, which is kind of interesting. And so then we went back to the rule base, and now we're coming back up. So kind of interesting results. If we look at the scoreboard right now, you can see, and don't forget, we only day trade 2 hours on Tuesdays, I'm sorry, and Thursdays. So 2 times a week for with a 1% risk. So this isn't even using 2%. And we're up 15.31% based on the results. And our payoff ratio is a little bit under 1 because we've been scaling out and we had to recover from the poor results of moving to break-even trades. So that was the issue we had with that. So our win percentage is 15.1, which is kind of cool. So that's kind of where we are. Our largest trade still above our largest loss. Average is kind of a little bit below because of all the scaling out that we had encountered. So how can this help you? Well, when you're doing trades and you experiment like we did on, changing, testing rules, testing a new procedure. If your equity curve is going down and you have enough trades under your belt for that test, then that isn't a viable way of doing things. And that's how the Trader's Assistant can help you ferret out what's working and what's not in your trading system. And so that is a very valuable tool because that can go very unnoticed unless you really have the results right smack in your face like that. For example, if we go back here, here's a long trade. Let's take a look here. Let's just go back to, those are way back. And then, all right, let's go to a more current trade here. Let's just say we go to something like on the 18th. Let's go to the MGC. All right, so we'll open this one up. The nice thing too is you can open up the trade posting card for any trade that you've made during the selected period. And it will tell you your entry, your exit, and let's see, on this case here, we scaled out 3 times. So there were 3 exits, 1 for 5, 1 for 5, and 1 for 1. All right, so those are all entered there. Now here's the neat thing. If we go to notes, check this out. I have the copy of the chart right here for us to look at. How cool is that? All right, so not only can you keep all your results in here, but you can keep the charts to see exactly what trade you did, no matter how many. So I can go back, through all the trades I did and take a look and see the specifics of each trade on the ledger. And these are all the closed trades there. Now we have a worksheet. So as you're, putting in orders, but they haven't been filled, they'll show up here. This is the open area. So if you carry any trades overnight, they'll show up in here. This is a day trading account, so it's closed out every day. Then you have personal notes overall, okay? And then closed trades with individual notes actually on each ticket. So each ticket can come up here. You can go to the notes there, and let's take a look at the chart. There's the chart, okay? So kind of cool, all right? So that's a really helpful thing. Also too, you can add potential stops here, because if you notice here, it's got a little area here. You click on add, and that way, if you have an open trade or even a day trade, you can put the potential stop in here, save it, and then come back to the card and see what it is. So you're always kind of knowing what's going on. And this is really helpful because if you have open trades, they'll all be listed here. So that way you're never caught blindsided by forgetting if you have an open trade or not. How many people out there are using the Trader's Assistant right now? Oh, wow, a lot. Okay, good. You like it? It's a little bit of a learning curve to learn how to use it, of course, but once you got it down, it's great. And you can put your account in here. We also have a area, let me see, options up here. See, options, click on here. You can add custom variables. Here's the place where the actual database is stored. So if you want to make a copy of that, you can, and save it someplace so you have a duplicate. You can always do that. Good idea to do that. And let's see, also too, if you're using a laptop, what you can do is you can save the, let me go back to that. You can save the database to, you know, an online storage, a cloud storage, and access that, you know, copy it and put it on your actual computer on your laptop and use it. And then when you're done on your laptop for traveling, you can put it back into your cloud and then access it from the home. You cannot use, we recommend, and it's not supported, to use the database directly from the cloud. All right, it's too many complicated instructions, and if you have bad internet, we don't want it to get screwed up. So copy it, put it in the cloud, and then copy it and paste it on the computer, in the hard drive on the computer someplace that you can find it, obviously, that you can use. And then once you're done with that computer, put it back on the cloud and then put it back on your desktop type of thing. So that's the way we suggest using that. But really, I mean, fantastic tool here. The other thing too is a little help button. So you can get actual online instructions on how to use it just by clicking that. And that will bring up all the instructions on how to use the whole thing and all that kind of good stuff, okay? So all that stuff is available for you. Okay, all of it right here. So pretty easy to use, but you got to get the hang of it a little bit. All right, so, you know, and also too, you can segregate dates. You know, if I just want to look at a certain time period, I can do that. If I want to look at largest winning trades, I can segregate that. If I want to have multiple accounts, I can create multiple accounts. I could have a testing account. I could have a position trading account. You can put the actual account of your brokerage in there as well, and a whole different types of things. Risk to reward calculator to tell you what you should put into the actual calculator for your risk percentage, your equity curve, the whole 9 yards. So really cool type of piece of software that can help steer you in the right direction. And I'm glad a lot of you are using that. That's really great. All right, so any questions on anything? How are you guys doing with all the other forms of software that we have? Everything going okay there? Everybody getting ready for Thanksgiving? All right, sounds good. All right, so any symbols? This happens to be the MES. This would have been a day trade here off the pyramid here, and scale out and stopped here. Now it's going sideways a little bit. We always use 3 time frames, even when we day trade. This is a 1 minute. This is the 15 second. This is the 5 minute. So in terms, this would be your primary or intermediate trend. This would be your short term for momentum. And this would be your long term for the overall momentum in the market, movement in the market. So you got a green PTF on the 5 minutes. So chances are we'll get up to this red line here. And that seems to be what we're kind of doing on that. And then we have, of course, other markets we can look at. You know, you got the Kryptos. You know, you don't forget, there's a lot of good. Let me just go also to ETFs. Don't forget about the ETFs. Let me just go over there real quickly. Ooh, good. No, I don't want to do that. So if you go over to ETFs, these kind of give you, this happens to be real estate ETFs, which are kind of cool. Because the real estate ETFs, like the REK, is an inverse real estate ETF. So, for example, let's say the real estate market busts, then the inverse ETFs will go up. So this is a great way for you to hedge your real estate if that happens. So you don't necessarily have to sell it unless you want to, all right? But this is going to be more liquid during a bad market than, of course, actual real estate will be. And I know, because I had a 50-person brokerage back in New York, and I owned it, and I had multiple units, both rental units and housing. And it's great while real estate's going up, but not so great when it's going down. All right, so it becomes very illiquid. So you have to be prepared for that. And this wasn't available for me when I had my brokerage back in the early 80s, but it certainly is now. So it's a great way to take advantage of hedging your real estate. So don't forget that. These are very super. Also too, the nice thing about all inverses, whether it's here or let's say you buy what the SQQQ, which is an inverse of the NASDAQ, again, you can buy these in IRAs. So some IRAs don't allow you to short, you know, so you can buy these in IRAs for you to take advantage if the market implodes. These will go down when the market goes up, and vice versa for all the major indexes. So these are a great way to hedge your portfolio. So if the market sells off, which we think it eventually will do here, probably in the next few months, we think this would be a great way to protect yourself in terms of being able to make money or hedge your positions. So a lot out there for you to know, and you can Google, you know, if you Google simply inverse ETFs, it'll give you a whole list of every one of them. All right, so then you'll have them all. Kryptos is another thing. Now, Kryptos is kind of interesting because I'm just going to take a look at the GBTC. You know, there's a lot of different types of symbols. I think what's going to happen with the Kryptos, we got one more high on the Kryptos coming, and then I think that's going to be it for quite a while. So I'm not a holder of Kryptos in terms of a long-term situation, but I am holding for getting into this target zone here. So 3, kind of 4, and a 5. So this is the target zone. Once that's hit, then I'm going to ratchet my stops up real close. Reason is that Kryptos right now remind me a lot of the .coms that came out in the 90s, late 90s, and created the 2000 bubble. And what's interesting about them right now is there's a lot of Kryptos, you know. There's many, many different kinds. And I do think crypto is going to be a big deal for us down the road, but I think everything is going to crash here pretty soon, including Kryptos. And I think what's going to happen is out of that crash, you will have a few that survive, and those will be the big ones going forward. It's kind of like during the .com bubble, you know, you had Amazon, you had Google, you had Yahoo, you had all these .com companies, then you had thousands more. Well, guess what? Like 900 of them went out of business when the market crashed, and then you had 100 that survived, and only out of those a few big ones. So I think the same thing is going to happen with Kryptos. It's hard to tell which exact ones will be the winners, but there will be some winners. But the problem is that we see once it reaches that top there, that we are going to have a big move to the downside. So we don't want to be holders of crypto during the next decline. Exactly, Chris. Chris is saying when everyone talks about crypto or a stock, including your broke barber, it's overblown. Amen. You know, that reminds me also too, you know, back in the 90s when everybody was a day trader and everybody did nothing but talk about stocks at parties and all these things, then you know you're at a top. And I think we're at a significant top, folks. I think it's probably not going to be much longer before the market implodes. And I mean implodes. Not a 20% correction. I think 50 or 60% is on the horizon. And once that happens, probably sometime in 2022, you'll get your first leg down, then you'll get a relief leg, and then a final leg. I think it's going to take about 3 years to reach a bottom, and probably another 1.5 years to climb out, to 2 years before we ever see highs in this range again. That's my opinion, based on Elliott Wave and whatnot. All right, so kind of interesting. Yeah, exactly, Chris, exactly. So I think that's on the horizon, but you know, you can't deny the market right now because price is always right? So we got to watch price. We have, you know, if you're a more subscriber or one of our market subscribers, you know the levels we're looking at that have to be broken, those support levels, before we can say we're in a decline. All right, so, you know, every week we get closer, but every week, I mean, here's the S&P 500. There is no sell-off yet there. You can wish it, you can want it, you can think it, but until we start going below these support levels, you know, first one being the pyramid, second one being here, second one being here. We go below this one, look out. Okay, that's the kind of thing. So price is always right. And again, my favorite analogy, because I used to do a lot of sailing as well, is if they're predicting a storm and you're in a sailboat and you're on the ocean, you know the storm is coming, but if it's perfectly clear weather and nice winds, you're not going to put your storm sails up, right? You're going to go with the reality of the current weather conditions and then change as those conditions change. Same thing with the markets. It's a good analogy, actually. All right, cool. So, you know, you go with the flow. Make sure you have stops in all your trades. And also, too, I think right now, it might not be a bad idea to go ahead and get a hold of your financial advisor, whoever manages your money, and talk to them about what to do if the market implodes. They may not think they will, they might not believe this or whatever, but it doesn't hurt to have the conversation. So if it does happen, you're ready. If it doesn't happen, then okay, fine, you had a conversation, big deal. But I think it's a good idea to start talking with them so you have a game plan, because I don't want people to get hurt when that happens. All right, and then have stops in place as well. And the problem is, you know, if the kind of sell-off that I think is going to happen happens, you're probably going to have to wait it out a good solid 5 years. And you're going to have prices get back into the teens, and nobody's going to be talking nicely about stocks then. So it'll be hard for you to emotionally, you know, stay in the battle, so to speak, with your portfolio, because stocks will be definitely out of favor at that time. And of course, that's when a bottom is in, and that's when you should buy. So just have a game plan. That's my point, okay? All right, everybody getting ready for Thanksgiving? You guys all set for that tomorrow? Markets close tomorrow and then reopen on Friday. All right, so that's all I got for today. If you want me to look up a symbol, I'll be glad to do it. I wanted to mainly cover how important it is to keep track of statistics, because especially when you test things and they don't do well, you'll see it. And then you'll know that that idea is not good, change it and see, go back to normal and see if your results don't return back to normal. That's how you know. So any idea that you have may sound great, but when you test it, not so great. Then you know. Or maybe it will be great, and then you know. So always test new ideas. Don't just throw new money at them, okay? Always test them, make sure they prove the proof of the pudding, and then go into it, okay? All right, well, we got a few minutes left, so if you want me to look up a stock, I'll be glad to do that. If everybody's anxious to get going for the holidays, we can do that. All up to you guys, because these webinars really are for you. Gene did tell me that we are doing, I think, psychology tonight on Wednesday Night Live, okay, psychology. All right, Jody, let's see what you got here. CERS. What are you doing with this one? Are you long, thinking about it? What do you got cooking on this? Okay, so you're long. All right, so on the daily chart here, you know, it perked way up so much that it created a greed bar, but then the greed continued. Now it's settling down. Now you have a green PTF, so that's a good sign. So the way that indicator works is you find the highest high in the green area, and that's this high peak here, which is a good thing. And there's a 75% probability based on this one indicator, it's a great indicator, that we will take that high out. So you don't have a change in trend yet. However, our stop needs to be here. Keep it there, all right? And you should get some type of rebound. Hopefully that stop will hold. It certainly should. And you'll get it moving back to the upside. Now let's just check a few things here. Let me grab the data box. So that stop on that one is 617. Let's see where it is on the weekly chart. It's 590. All right, so it's a little lower on the weekly chart, but that one should be pretty good, okay? I would use that stop at this point. The other reason I like that stop at this point is because if I drew, let me just get rid of those things I drew up. If I drew in a fib retracement, you're going to see that that stop on this little pullback here, all right, sits way under that. And out of curiosity, let's just draw this one here. All right, this one here is at the lower part of it, so it should hold. I think you're going to be in good shape on that. All right, so I like it for a long position, but it's definitely trending or correcting right now. And I don't think the correction may not quite be over. It could be, but if we look at this, let's just draw a fib in here on the 60-minute and see where that sits it. So I'm going to draw it from here to here. And look, we're smacking the 50% retracement. So this is due to, this is a 3, 4, 5. So we should be heading back up on here too. And here's your ABC correction. So we'll see. We still got a red owl on the 60-minute. So I'd like to see that turn green. The owl, of course, is the momentum indicator here. And it's good solid green here. I think you'll be fine on this. However, when you get above this next high, definitely consider getting out. Let me just draw the fib extensions, give you an idea maybe here. So we're talking about $8.23. You want to think about possibly getting out. Let's see where the high is on the PTF. And that's $8.06. So when this PTF turns yellow, it'll do that when it reaches above this high. I would scale out a half of your position there, and then I'd put my stops under the price bars and try to make it to the target zone. Okay. All right, anything else? Oh, Chris, are pyramids drawn based on changes in momentum or what causes the triangle? Great question. All right, so when a triangle forms, let's just kind of zero in on one of them here. Okay, so there's a triangle, okay? This is a trend line, that's red thing, so don't worry about that. All right, so when a triangle forms, what it's doing is it's looking at the momentum on the left side of the triangle as it's moving up. And then a pivot or something comes and momentum changes and shifts to the downside. All right, and then it changes again and comes up. So the idea behind a pyramid is it's measuring the momentum on 3 legs, the left side, the right side, and then when it starts to head back up again. Now, the definition of a trend is higher highs and higher lows. So when a triangle forms in any configuration, you have to have that particular pattern, price pattern. So here's a low here, low 1, here's a high 1, here's a low 2, and then when it exceeded it, you have a high 2. That's when the pyramid turns green and you get the P under it. So we call that a confirmed pyramid, okay, confirmed pyramid. And so the idea behind that is your stop would go here then, and if you had one over here, so it would be trailed up to here. Now, this pyramid, even though it has this higher high pattern, if the momentum was not stronger on the leg to the upside as compared to the calculations of the left and right hand side of the pyramid, then the pyramid would not form. So you're correct, Chris, in saying that the pyramid does form on momentum, but it forms on momentum and price pattern. So it's looking at 2 things. And it's a pretty complicated correction because notice here you have a little one that formed, but some areas, now you could get one in here, but you might not, okay? So some areas you don't always have them forming, like here. Well, no, that's not one. Let me just go back and see where we have one here that may have. Okay, so for example, one could have formed in here, but it didn't. But then prices went below it, so it would avoid it out. But anyway, you might have higher highs and higher low patterns with no pyramid because the momentum wasn't there. Okay, so hopefully that helps. Good question. The art software is awesome. It does a really good job. And you can see it here on CERS, even on the, and it works on all time frames and all markets. Because if I remove the price axis over here and the time axis, you wouldn't know if you were looking at a 60-minute chart, a weekly chart, a daily chart, or a 1-minute chart. You would not know the difference. And that's because you see the same price patterns form on all different time frames as a reaction of traders on those time frames are the same types of responses. So in a case like this, here's a pyramid that formed here, here, and stopped you out here. And then they got them to the downside. And then we use that in conjunction with the owl that we only take long trades when we have a green owl. Okay, so here's one, initial entry here, stop here. All right, move the stop here, here, and here, and then get out, that type of thing. So you could trade the 60-minute time frame if you wanted to take a shorter term trade. Just saying, okay? Yes, the momentum has to be stronger on the right-hand side of the triangle, correct? Not the right-hand side, on the third leg of the triangle. So it measures momentum on the left, the right, and then the third. And there's a couple other calculations regarding comparing the momentum on the right-hand side of the triangle to the left-hand side of the triangle, creating a normal average true range of momentum, and then calculating what the third leg is in proportion to that. So it's not a very simple calculation, but it's one that we derived over time that gives you a better probability when they form that they are a significant part of the trend. Yep, same, opposite, exact same thing what I told you, just opposite for a bearish one, correct. And you see here's bearish ones here. And the point of the triangle always faces in the direction of the trend. And before there was software, I used to kind of manage like a hedge fund of wealthy people at Prudential Securities. And what we used to do, and this is going back before there were fancy computers like there are now, I used to have to do all these things manually. I mean, all the numbers manually. And when the software could be programmed, then it was great. And really, the pyramids are nothing but an icon on the price bar so you can see it. And of course, the apexes are used for entries and the bases are used for stops. And they're one tick over, one tick under type of thing. Jody, my pleasure. Okay, thank you for asking. Okay, cool. Yeah, good question. Usually when I have a seminar on art, I do talk about those momentum parts of the pyramids. So it's a good thing. It's a good thing to talk about so you fully understand what's going on. It's not just drawing nice little lines on simple patterns. There's a lot more that goes into it. Wow, that's pretty intense. Chris is saying, that reminds me of my undergrad days working in the semiconductor industry, using magnifying glass to review plots to find bugs in chip designs to verify the computer. Wow. Strong magnifying glasses, I guess. I mean, computers are amazing. I mean, the technology right now, to me, is just awesome. Okay, I can only imagine what it'll be 100 years from now. But you think about how we did things 20 and 30 years ago compared to how we do it now, and it's just phenomenal. But the other interesting thing is that if you look at the amount of successful traders, you still have a 90% loss rate, even with all the computer power. So computers while they give us information, it's still up to the individual to interpret the information and not act on emotion, impulse. And then, of course, you can also cross that line and have too much information, right? What's interesting, I remember during a trading challenge where I was competing against somebody else, somebody had a chart up and I was looking at that and it looked like spaghetti. There was so much lines on the chart, I found it to be like information overload. Usually when people have excessive amount of information on their charts, they're trying to take the risk out of trading. And you can't do that entirely. You can go with the probabilities, but you're never going to have all the uncertainty taken out of a trade. That's why we use risk control. Okay. So go with what gives you a probable outcome. And you know, the probable outcome doesn't have to be that great. If you're right 60% of the time and have a payoff ratio 1-to-1, you're going to make money. If you have a payoff ratio 2-to-1, you're going to make even more money. So you don't have to be right 80 or 90% of the time. In fact, I don't think there's too many people that are, unless they trade maybe once during a black swan event every 5 years or something. All right, but in terms of an active trader that goes in and out of the markets every day, every week, your consistency needs to be there, but it doesn't have to be 80%. So don't forget that. All right, well, I went a little bit over, but all good stuff, fun stuff to talk about. Thank you for being here. Hopefully that helped you. If you are not keeping good records, please consider the Trader's Assistant. It's an awesome tool, and it will really ferret out any problems you're having so you can fix them, you know, that type of thing. Other than that, you guys have a great Thanksgiving, all right? And we'll see you back here next Wednesday, all right? And the markets are closed tomorrow and back open on Friday. All right, have a good one, everybody. Thanks so much for being here, and thanks so much for all the questions, everybody. Bye-bye. Thank you. Thanks, Jody. Thanks, Chris.